Hello everyone, and welcome back to the channel. Today, we're diving deep into a topic that's surrounded by a ton of hype, mystery, and unfortunately, a lot of misinformation. Forex trading. You've probably seen the ads online. People leaning against fancy cars, showing off watches, claiming they made a fortune overnight just by clicking a few buttons. It sounds amazing, right? But what's the real story behind the world's largest financial market? Is it a golden ticket to financial freedom, or is it just a high-stakes gambling? In this video, we're going to bust some of the biggest myths about Forex trading and give you the straightforward, no-nonsense truth you need to know. So, if you've ever been curious about Forex, or maybe even a little skeptical, stick around. We're about to separate fact from fiction. Let us start with the most persistent and dangerous myth of all. Forex trading is a get-rich-quick scheme. This is the myth that lures so many people in, and sadly, it's the one that causes the most financial pain. The slick marketing shows you lifestyles of the rich and famous, suggesting that with a small deposit, you can be making thousands of dollars a day, every day. The reality? Forex trading is not a lottery. It's a highly complex, skill-based profession. Think of it like learning to be a surgeon or an airline pilot. You wouldn't expect to perform open-heart surgery after watching a few online videos, would you? The same logic applies here. Success in Forex requires a deep understanding of economics, technical analysis, risk management, and market psychology. The traders who are consistently profitable have spent years, not days, honing their craft. They've put in thousands of hours studying charts, testing strategies, and most importantly, learning from their losses. So, if anyone promises you guaranteed fast profits with little to no effort, you should run in the opposite direction. It's simply not how it works. This brings us to our second myth. You need to be a math genius or have a degree in finance to trade Forex. On the one hand, as we host side, it's not a walk in the park. But on the other hand, you don't need a PhD from an Ivy League school either. While a background in finance or economics can certainly be helpful, it's not a mandatory prerequisite. What's far more important is your dedication to learning and your discipline. Many successful traders come from completely unrelated fields. They were teachers, engineers, artists, you name it. What they have in common is a relentless curiosity and a structured approach to education. They committed to learning the fundamentals. How currency pairs work, what drives their movements, how to read charts, and how to use trading platforms. Today, there's a wealth of high-quality educational resources available online, many of them for free. You can learn about candlestick patterns, support and resistance levels, and economic indicators without spending a dime. The key isn't being a genius. It's being a dedicated student of the market. Discipline, patience, and a willingness to learn are your most valuable assets, far more than any advanced degree. Now for a big one, myth number 3. You need a lot of money to start trading Forex. This used to be true decades ago. Back then, you'd need a huge amount of capital, and the market was pretty much exclusive to big banks and financial institutions. But times have changed dramatically. Thanks to the internet and the rise of online retail brokers, today you can open a Forex trading account with as little as $100, or even less in some cases. Brokers offer something called leverage, which allows you to control a larger position with a smaller amount of capital. For example, with 100 TO1 leverage, your $100 can control a $10,000 position. Now, this sounds fantastic, but it's a double-edged sword. Leverage magnifies your potential profits, but it also magnifies your potential losses just as much. A small market movement against you can wipe out your entire account very quickly. This is why understanding leverage and risk management is absolutely critical. So, while you don't need a fortune to start, it's foolish to think you can turn $100 into $1 million. A more realistic approach is to start small, with money you can afford to lose, and focus on learning the process, not on making a quick buck. Your initial capital is your tuition fee for learning the markets. Let's move on to myth number 4. You can just copy successful traders and make money. This is the allure of copy trading or signal services, where you automatically mimic the trades of a supposedly professional trader. It sounds like the perfect shortcut, right? You get all the profits with none of the hard work. But there are major pitfalls here. First, how do you verify that the trader you're copying is genuinely successful over the long term? Many platforms show impressive short-term gains, but these can be the result of pure luck or taking on massive, unsustainable risks. That star trader could have one bad week and blow up their account managers along with it. Second, you have no understanding of the strategy behind the trades. Why did they enter that position? What's their exit plan? Without this knowledge, you are completely dependent and flying blind. What happens if the service suddenly stops? You're back to square one. True trading success is about developing your own edge, your own strategy that fits your personality and risk tolerance. Copying others is like trying to drive a car by having someone else tell you when to turn the wheel without you ever looking at the road. It's a recipe for a crash. Myth number 5 is a bit more technical, but super important. The more complex your strategy, the better it is. You see traders with screens full of dozens of indicators, lines, and oscillators, and you think, wow, they must really know what they're doing. In reality, this is often a sign of confusion, a condition known as analysis paralysis. They have so much conflicting information that they can't make a clear decision. Many of the most successful and consistently profitable traders use remarkably simple strategies. They might focus on pure price action, basic support and resistance levels, and maybe one or two indicators to confirm their ideas. Simplicity leads to clarity. A clean chart allows you to see what the market is actually doing without the noise of 20 different lagging indicators. The goal isn't to predict the future with 100% accuracy. That's impossible. The goal is to find a simple, repeatable edge that gives you a statistical advantage over a large series of trades. A complicated strategy that you and fully understand is far more dangerous than a simple one that you've mastered. Don't mistake complexity for sophistication. In trading, more often than not, less is more. Another popular myth. Number 6. You have to be glued to your screen 24 hours a day. The Forex market is open 24 hours a day, 5 days a week. And this leads many beginners to believe they need to be constantly monitoring their charts, terrified of missing a move. This is a direct path to burnout, emotional decision-making, and ultimately, failure. Professional traders value their time and mental well-being. They understand that you don't have to trade all the time to be profitable. In fact, there are many different trading styles to fit any lifestyle. If you have a full-time job, you might be a swing trader or a position trader. These styles involve holding trades for several days, weeks, or even months. You might only spend an hour or two each evening or on the weekend analyzing the markets and setting up your trades. You use tools like stop-loss and take-profit orders to manage your trades automatically while you away from your screen. On the other hand, day traders or scalpers make many trades within a single day. But even they don't trade for 24 hours straight. They focus on specific high-volume sessions like the London or New York Open, trade for a few hours, and then they're done for the day. The key is to find a style that fits your schedule and personality, not to force yourself into a lifestyle of sleepless nights and constant anxiety. And finally, let's bust myth number 7. Losing a trade means you're a bad trader. This is a huge psychological hurdle for newcomers. We're conditioned from a young age to believe that losing is bad and winning is good. In most areas of life, that holds true. But in trading, it's different. Losses are not just a possibility. They are an inevitable and necessary part of the business. Even the best traders in the world have losing trades. George Soros, a legendary trader, famously said, "It's not whether you're right or wrong, that's important, but how much money you make when you rewrite, and how much you lose when you re-wrong." Success in trading is not about winning every single trade. It's about having a system where your winning trades are significantly larger than your losing trades. This is the core of risk management. A professional trader might win only 50% or even 40% of their trades, but because their winners are, say, 3 times bigger than their losers, they are highly profitable overall. Shifting your mindset from trying to avoid losses to learning how to manage them is one of the most critical steps to becoming a successful trader. A loss is not a failure. It's feedback. It's a business expense. So, let's recap what we've learned today. Forex is not a get-rich-quick scheme. It's a serious profession that demands education and discipline. You don't need to be a math genius. but you do need to be a dedicated student. You can start with a small amount of capital, but you must respect the power of leverage. Copying others is not a sustainable strategy. You need to develop your own edge. Simple strategies often outperform complex ones. You don't have to trade 24/7. Find a style that fits your life. And most importantly, losses are a normal part of the business. Managing them is the key to long-term success. The world of Forex trading can be incredibly rewarding, offering a level of freedom and intellectual challenge that few other professions can match. But it's a journey that must be approached with realism, respect, and a solid educational foundation. Don't fall for the hype. Do your own research. Start with a demo account to practice without risking real money, and build your skills brick by brick. That is the true path to navigating the Forex markets successfully. Thanks so much for watching today. I hope this video helped clear up some of the fog surrounding Forex trading. If you found this helpful, please give it a thumbs up, and don't forget to subscribe to the channel for more honest, no-nonsense content about the financial markets. If you have any questions or your own myth-busting stories, drop them in the comments below. I'd love to hear from you. Stay curious, trade smart, and I'll see you in the next video.